Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. After the big break lower, when the two pitchforks split this market back in October last year, we had seen some deviations lower to make a small sideways triangle, for example, over November, December last year. But overall, prices had tracked sideways until 5 weeks ago. To discuss this point, we must look back 14 weeks ago when I said about the sideways movement of the market, and I quote, "I suspect this seeming sideways movement may not last, as coming in from above, we have the declining short-medium moving average, currently 16,900, which may well apply pressures on prices and cause an action or a reaction," end of quote. Now, remember that short-medium moving average is highlighted in green on my daily chart and will crop up again later on. Anyway, in late January, we did have a reaction as the short-medium moving average initially caused a reactionary move lower before turning higher 5 weeks ago. Prices shot straight up through the declining medium moving average 4 weeks ago. That's currently at 16,855, almost as if it wasn't there. Indeed, prices used the medium moving average along with the June 2021 low at 17,095 as a base of support for another move higher, through the October 2019 high at 17,815, through the July 22 high at 18,265. Thus, the large base of action formed over November 2023 to February 2024 had seemingly been enough to significantly turn prices higher. So what's next? Well, as I said 2 weeks ago, and I quote, "Next overhead is the June 2021 high at 18,610 and the August 2019 high at 18,850. But in between them, we have the gold highlighted slowly declining long moving average. That's currently at 18,486. Should these three be taken out, then we have little in the way until the September 2022 low at 20,045, end of quote. Well, 2 weeks ago, we saw the market continue its moves higher, but running into a brick wall with the declining gold highlighted long moving average, and the whole market turned back down. Now, I have been contemplating what sort of pattern the market's creating. I said 2 weeks ago, and I quote, my initial thoughts 2 weeks ago, which is actually now 4 weeks ago, my initial thoughts 2 weeks ago were to look at the early November 2023 today action as a possible rounded bottom pattern. But the more I look at it, the less I like it. Instead, I'm inclined to look at the whole early August 2023 today action as a possible descending scallop pattern. This has merit, but it's very elongated, and that is a negative point. The main thing in its favor is a new pattern I suggested might be created 2 weeks ago, and which we have indeed completed, and that is a monthly key reversal up by some considerable distance. Thus, I'm looking now for where the hesitation will be for such a pattern on the top side, end of quote. So I was readying to look for hesitation in this market 2 weeks ago, and guess what happened? We had hesitation 2 weeks ago, and prices have dropped back down, such that they are now testing the medium moving average. In fact, they've just popped below it. It's highlighted in green on my daily chart, and the one I asked you to bear in mind at the start of this commentary. Okay, so this hesitation 2 weeks ago now could mean that we could see a test down to the low seen in February, November 2023, down in the 16,000 to 15,850 zone. And from there, we could see potential targets for the descending scallop pattern. LME 3-month zinc. The big picture here is based very much on actions originating from last year, with some limited skewing, I suppose, and recently a bit of battle happening. You see, I've said over many weeks here, we've had two competing shift pitchforks. We had the recent late May to mid-August 2023 mildly bullish shift pitchfork, which is highlighted in bright red on my daily chart. The market's at the moment between the middle time above, currently at 25.62, and the lower time below, currently 23.97, with all the moving averages clustered a little underneath it, between 24.69 to 25.12. This segues into the second shift pitchfork, the larger, very large, May to August 2022. That's right, a pattern that is a year and a half old. The May to August 2022 bearish shift pitchfork, which is highlighted in purple on my daily chart. In this one, and it is a very important thing to note, in this one prices late 3 weeks ago, then 2 weeks ago, last week and now this week have punched in and out, up and down either side of the venerable upper tine, currently at 2487 of this bearish shift pitchfork. This has been the rub of this market. I said 4 weeks ago, and I quote, "The upper tine of the larger purple highlighted bearish shift pitchfork is now well within the smaller bright red bullish pitchfork. Indeed, they cross over on the unusual 29th of February this year." End of quote. I further added, and I quote, "I would now like to emphasize once again how this bearish shift pitchfork, which is now well over a year and a half old, I wish to emphasize how it is still working in the overall bigger picture to drive prices lower despite moves upwards during 2023, including the monthly key reversal up we saw in December last year. One way or another, the tines are being tested here. The question is whether the bright red bullish shift pitchfork will give way and we see prices move down through the lower tine again, or will the bigger purple upper tine give way and we have a whole new potential outlook on this market. As I said, during January and early February, we should know by the end of February, probably sooner." End of quote. Well, it took a little longer than I anticipated, but the break higher up and out of the purple bearish shift pitchfork has not been adequately sustained, and much like last week, we are on the verge of a possible false break. The question now is, what's next? Well, we are now today peaking below the congestion. Not more than peaking, we're actually pushing below the congestion of the moving averages, and we have seemingly little in the way until support at 2397, which is currently coincident with the bright red lower tine, currently at 2397 also. My concern now is that we might end up with a situation similar to the one we saw in LME 3-month nickel back in October last year, when two pitchforks ripped apart the market and neither came away from it unscathed. I don't think that's likely here just yet. As though we are dealing with the upper tine in purple, we are still within the bright red bullish pitchfork. It may well have to wait until the end of April, when the rising red lower tine exits through the declining purple upper tine, when we may see such a resultant potential ripping apart action. LME 3-month tin. There are multiple patterns here, still visible and still acting here on this daily chart. This year's actions has seen the market push back up from the stratified congestion bands below and over all the moving averages up to highs not seen since July last year. This emergence led me to a just barely possible pattern here, a mid-October 2023 to late January 2024 inverted head and shoulders pattern for dark blue highlighted neckline currently at 26,630. I said 7 weeks ago, and I quote, "You see, I'm not happy about this reverse head and shoulders pattern. I see myself trying a little too hard to optimize the pattern to the information available. And whilst it looks okay-ish, I'm still not happy about it. Hence the moniker of a possible reverse head and shoulder pattern." End of quote. I even went as far as 7 weeks ago of laying out some potentials above, which have since become targets. Thus, we had a primary target in the 28,100 area, secondary hard to reach target up in the 28,895 area. Both these targets have been achieved. This brings me to another pattern, and one related to the reverse head and shoulders, and that is a mid-October 2023 to date ascending wedge pattern. You can see this highlighted by two trend lines. The lower trend line currently at 26,520, highlighted in bright red, and supported by the rising short medium moving average currently at 26,580. And the previously mentioned neckline currently at 26,630 above, highlighted in dark blue on my daily chart. Well, not above the market, above the lower trend line. Now, this ascending wedge pattern along with the reverse head and shoulders pattern has given some additional potential targets above, of a primary target in the 28,360 area and a secondary hard to reach target X3 up there in the 29,600 area. The primary target here has been achieved, whilst the secondary harder to reach target is still live. Okay, so you may think that may be all, but there is a further final pattern that is developing, and it's related to the lower uptrend stroke lower trend line of the ascending wedge pattern. I said 2 weeks ago, and I quote, You see, it seems the ascending triangle pattern has morphed into another pattern, this time into a bull channel, a late December to date bull channel, and that's currently 26,520 to 29,345. And that's the end of the quote. Now, to help aid in seeing this pattern, I've highlighted the upper bull channel line, also in bright red, same as the lower bull channel line. Now, as I said 4 weeks ago, actually, I said of all, and I quote, of all the patterns, I think is the only one to pay close attention to, as it's still fairly young compared to the others, but it's also the most potent, end of quote. What has been extraordinary has been the influence of the upper red bull channel, currently at 29,345, the line there, on this market. Not only has it capped prices in all this year, but has caused the market to fall off a cliff last week. The move lower was so violent that last week I mentioned that we were a good way towards making a possible weekly key reversal for last week. In the end, prices tempered the move and we ended up with a lesser outside week pattern for last week. But there's things still going on.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.